Yep, we're here with Jamie Dimon. Jamie, this is quite a commitment to an area that frankly has gone from banked to unbanked. Citi just pulled out over the course of the last 5 years, $50 million in network. 330 banks have closed in the last 10 years. Why? Why now?
Yeah. Well, with regulatory reform and tax reform, we announced this $20 billion thing going to many cities. Obviously, Philadelphia is the 7th largest market in the United States. That's not including their biggest suburb called New York. And we like to be part of a community. We're already here in investment banking, commercial banking, private banking. Retail is a gap. So we're going to open 50 branches. 20% will be in LMI neighborhoods like this. And when we come in, we bring the full force of JP Morgan, which is philanthropy dollars, but to really help people like Entrepreneur Color Fund, affordable housing units, and we enjoy it. It's good for the company, and over time, and we invest the long run. We never pull in and out of something.
Talk about the multiplier effect. And when you open a branch, people think, you know what, we don't need branches anymore. Everything's digital. Yeah. But brick and mortar works.
It's amazing. So I think people aren't thinking clearly. 1 million people visit those branches every day. The type of branch is going to change. The size of the branch is going to change. They're getting smaller, but more advice. So there's a mortgage loan officer in there. There's a small business loan officer. There's a financial advisor about your financial affairs. So that'll change, but 1 million people. Even the average millennial visits something like 3 times in a quarter. So to me, the question of branches will morph, they'll change, but you still need to serve your client the way they want to be served, not the way I want to serve them. As you know, we've rolled out all these new products too.
Right.
Like Finn, the online-only bank.
Right. Well, I'm glad you mentioned this because a lot of people feel that 10 years ago, one of the problems was the education of the borrower. The borrower did not know enough about what to do. You said there'll be someone in there literally to help and to teach.
Yeah.
Will that make a difference versus, say, 10 years ago?
Yeah. I've told the people here, when you go to these LMI neighborhoods, try something special, but we're going to roll out a lot of financial education tools. We have You Invest. We're going to roll out a self-advised group, and we haven't decided how to price it yet, so that you can advise and think about it. We already put on the screen, you can get your FICO score. And we're going to teach you ways in which you can improve your FICO so that you can reduce cost of borrowing and stuff like that. We have to do a better job, not just us, but America, educating people in financial matters, from rainy day funds to handling, retirement account, and so we're making a special effort to do that now. So we have things coming out that hopefully our customers will enjoy.
Well, let's talk about the power of business versus the power of government. The government legendarily got big settlements from different banks, $13 billion from you. Keith Brouette says that you paid a total of $44 billion. Did that money go into the community, and was that the way to get things done versus the targeted way you're doing?
Well, this actually helps the community. I mean, some of those funds, we don't actually know how they're dispersed, and I think one day someone should look at that. And that's kind of the past. We've moved forward about how we do it, but this is how you build a community.
Right.
Small business lending, affordable housing, branches that advise people, and we know that works. Cities, this city, Philadelphia, your great hometown,
yes, thank you.
The city is doing better and better and better, but parts of it are not. And so we do make a special effort in those parts of that city.
Now, there is a sense that lending nationally has slowed down. I'm not getting that from your bank. Can you give us a sense of what's going on in places that, frankly, are unbanked, and whether there is a revival that can actually move the needle for you?
So one important thing, these things work when you do it with civic society and government.
Okay.
They don't work when we're at each other. So we've seen all around the world when mayors, not-for-profits, businesses work together, you can get people jobs, you get them trained, you get them employed, and it actually works. And so, but in America, the economy is quite strong, and it's grown at 3%. It has been now for a couple of quarters, and it looks like that way. There are no great potholes, so that may very well continue. And so, lending, there is a little bit reduction in lending in middle market. We don't exactly know why. Large corporations, of course, borrow in public markets.
Too flush? Could clients be too flush?
I think, we do know there's an effect that through tax reform and corporations earning money, they need to borrow less. It's just hard to tease it out what that really means. But if you look at employment, growth, people going back to work, it's pretty good.
All right, now, last week, you told CNBC that it's not don't call it a trade war, call it a trade skirmish. Previously, you have said that there could be, at times, perhaps, a slowdown, or at least in the psyche, because of any sort of trade war. How are you feeling about that?
Yeah, so I told a trade skirmish, $20 billion of tariffs in and of themselves are a little bit of a tax. If it all gets paid, it's a tax in America. Remember, people do other things.
Right.
They have other supply lines, but it's a $20 trillion economy. So that is a negative. Mm-hmm. The real negative isn't that. It's confidence, consistency. If people start reducing investment, people start moving the supply chains around, that we have seen already moves the markets a little bit. And the fear that the skirmish may become a war. So we really don't think it's a great way to go about it. It could easily offset some of the benefits that you've seen from regulatory reform and tax reform.
I wanted to talk to you about regulatory reform. Marianne Lake said recently, your fabulous CFO, that we haven't really seen genuine regulatory reform that would make her happy. No. But there's been so much. It's been a change of attitude, no?
Yeah. So I think when I travel around, CEOs of other industries, logistics, steel, manufacturing, pipeline, they've all seen it. Have we seen actual changes in regulation for us? Not really. They have a long list of things they want to do. There has been regulatory change for the smaller banks, which we totally support, to make it a little bit easier for them, reduce the burden on them, but it didn't have anything to do for the bigger banks. I think, and the public should know, we're not asking for throwing out Dodd-Frank. People should look at calibrating, getting rid of duplication, looking at things that hurt the mortgage markets, hurt this kind of market, so you can enhance growth and do it safely. No one's looking at, going back to the good old days, just recalibrating. Remember, there were 2,000 rules. It wasn't like one or two. It was a lot, and they were done in haste. And people should always rationally look at cost benefit, what makes sense, what doesn't, all keeping the system safer. And remember, growth, a stronger economy, it also makes the financial system safer.
Now, you just mentioned no rate potholes. We've got a Fed meeting that's coming up this week. The spread that you would get 2 and 10, to use the typical logic that people say, means that you can't make as much money and therefore you can't lend as much.
Yeah. So when I say the no potholes, the household's in good shape, people going back to work,
FICO scores
in good shape,
high.
FICO scores are fine, companies are flush, tax reform is still a benefit. We don't have the extreme leverage we had in 2008. And all the lending has been pretty good, prime, good lending. So it's not been bad lending. But absolutely, there's friction out there. And there's always friction. If you open up a newspaper any week of any month, there's tons of friction. And it's mounting. Brexit, QE, Turkey, Argentina, and we don't know the full effect of those things. So yeah, we keep our eye on that. But it may not derail the economy. You got to separate the two.
I keep thinking these are all things that should play to your fortress balance sheet strength. We got European banks that are really on the run, so to speak. Why isn't JP Morgan making greater presence given the weakness of the rest of the world?
Yeah. Well, we do. We're in every country we're in, we're steady, growing, and we do country by country, adding more bankers, systems, people, and all the support, risk, legal, credit, compliance. So our share in Europe has gone up considerably. And we're just doing it by adding people and adding branches and the basic good old 3 yards in a cloud of dust.
Well, okay, when I hear 3 yards in a cloud of dust, I think you should get a higher price earnings multiple, for heaven's sake. You're selling at 12 times next year's earnings. We've been at this game for a long time. If for your growth financial with money that's made every single day you open the door, why aren't you valued like a typical S&P company?
That's a question you're going to have to answer. Banks are still under political, regulatory constraints and all that. We just went through the crisis. So I think a lot of people as investors probably always a little worried. But you're right, we're earning very good returns in capital. We're growing. When a cycle hits, obviously it's going to affect the bank, but we will manage right through that cycle, just like we did right through the last one.
Okay, when I think about that, I think that you must be in there buying stock every day for the company. You've chosen a path of buying back stock, shrinking, but I still can't believe how many shares you have. For the last 10 years, your share count has not gone down enough. When will you start getting back to a level where you really are not, where you're sopping up the darn supply?
So I don't remember the exact number, but our share count's down like 15%.
Yeah, but it's still 3.6 versus 10 years ago, it's 3.5. I mean,
Yeah, well, there's some that have been issued over time, but since I've been there, it's been coming down. So, okay. But if you want to look at something, I would prefer to spend that money not buying back stock, doing this. So growing our business is far better for the economy. Right now, we don't have a lot of choices, but over time, I really would prefer not to buy back stock. Companies should do it when it makes sense. And I also don't buy this argument that it's bad. Buying back stock is simply giving it back to you, an investor, who then redeploys it to a better use. Okay. It's redeployment of capital that should be redeployed if a company can't use it. But my drill is always to grow our business, which we're now doing. Okay. 500 branches. We're now in all major cities for investment banking, middle market banking, et cetera. We've been growing overseas, but think about any bankers and people and stuff like that. So that is my P2P. You invest, building products and services. So you're going to see a lot more of that coming in the next 12 months.
When I think about this, and I'm very proud of what you're doing in my home city, but I do say, okay, Apple Pure Capitalist says, listen, Jamie, we're shareholders. We should get that money. There's no real instant payoff here within 2-3 years. It's going to take a long time.
No, it's not true. I mean, first of all, accounting, you got to be careful about. But when we build a branch, okay, and we put $1 million, I don't even want to give the numbers publicly, we put capital in the branch, but 5 years later, that branch could be contributing to profit $1 million a year. So, the timetable of that, new cities, it's a little more complicated than we open a branch in the city we're in. But again, we already serve 60 million households. We want to serve 70 million. We want to bring them all the products and services we have. So there is a financial payoff. It is not overnight, but I don't worry about that. I just explain to people like you that that's okay. The MPV is very good, and it's going to be negative the first year, maybe break even by the third year, and then a plus.
How about us who are depositors of JP Morgan? We're not getting the rate that that you're going to get on the 2-year. Yeah. When are you going to start paying your CD and your depositors more?
So when rates came down, it came down like this. As rates came down to zero, banks didn't do it. So when rates started going up, they didn't pass it on. I think now you're going to see, and obviously people have other options, money market funds, et cetera. But I think now, as rates go up the next 25, you'll see what we call it beta. How much will be passed on? It'll go up and up and up.
Well, is that going to shrink profitability? Should I be worried?
Not really, because we're gaining deposits, and the spread that you're maintaining between your cost of funds and what you're paying will be about the same.
Jamie, you're talking about just like the politicians did in 1964. You're talking about a war on poverty, that business seems to be doing a better job. You mentioned that in the big settlements from, say, 2013, when Associate Attorney General Tony West was kind of after the bank, that was you being on the defensive. You're playing the offensive and trying to change poverty in this country. Yeah. Do you feel that you can do it better than the government?
No, I think government and business have to do it together. And it works at a local level. We see it in Detroit, we see it in New Orleans, we see it in Chicago, we see it in LA, you see it in Philadelphia with great ideas. And most of the things we talk about, affordable housing, skills, commercial development, it's not Democrat or Republican. But I think business and government together can do it. If business, you can't do it without business, and business can't do it without government. Government obviously is going to play a role in both in terms of regulation and licensing and stuff like that. And while America is the most prosperous nation on the planet, we really have to focus on these issues about income inequality, infrastructure, opioid crisis, lack of education in inner city schools that end up in good jobs.
Jamie, you know what you sound like when you say these things. You sound like a politician.
Well, I'm a patriot.
Okay, but if you're a patriot, so was General Eisenhower. We didn't know whether he was a Democrat or Republican, but he ran for president because he was a patriot.
He won World War II.
Well,
I'm a banker. I'm not running. I think it's very important that we have good policy, and that we should focus on good policy and all the time. And as you know, I don't mind speaking about good policy, analyzing and participating in a way that JP Morgan can. So if you're in other areas, other companies will do a better job than we can because they're far more knowledgeable. Okay. But in these kind of areas, we can really help communities.
Are good business skills ever really transferable to government, though?
I think some are, yeah. I mean, administration, management, leadership, organization. But that doesn't mean a CEO will translate to a good politician.
Okay.
Politicians have a whole set of different skills and, relating to people and understanding and empathy. And so, but that doesn't mean, I would never say never that people can or can't. Some have done it, most have failed.
When you say never, again, it brings me back to the dialogue.
No, I would never say never for someone else. I would not say a CEO cannot be a good president.
Do you think it's too soon?
And President Trump was a CEO, so...
You just met Mayor Kenny here from Philadelphia. That's something that would not, I don't want to say frowned upon, but wouldn't be believable 10 years ago when bankers were considered to be antithetical to democracy even because of President Obama. Has it changed enough that now you're welcome in communities that were solid Democrat areas that I think really abhorred bankers?
It's nice to be welcome, but just so you know, we never stopped seeing mayors, governors, presidents, prime ministers, senators, even people who didn't like us, because we always said it isn't about what they like. Are we doing a good job? Are there legitimate complaints we should handle? What should we do to make it better for people? And so we never stopped doing it, but it's nice that it's done, when people do like you.
Okay, I want to speak about the country. You have been on record saying, we know, greatest military, greatest educational system. Is there
the best educated, the best and the worst?
Okay,
right? We're filling inner city school kids. Half of them don't graduate, like in the poor neighborhoods, and a lot of kids aren't getting the skills they need to have a job. And so that is a failing. We should be ringing an alarm bell about that, but we don't, and I don't know why.
Well, what can you do beyond what you're already doing?
Well, we're doing a tremendous amount in skills. So what we do in skills is we go to local schools. Like we now work with Gutman in New York to train, my wife did this, by the way, to train kids to be tellers. $36,000 a year, $12,000 medical and pension benefits. The kids like the jobs, and that's the first rung. Then they can move up. They can become a banker. And a lot of our branch managers were tellers, and a lot of the regional managers were tellers. So we could do it for ourselves, but we also help schools locally, whether it's a high school, whether it's apprenticeships, whether it's a community college, with money, but it's not just us. It's all businesses that need jobs locally. They need special training. So that really has to be done locally. That should be a national program.
All right, $1.5 trillion in student loans, 23% default last year, supposed to be 40% by 2023.
Yeah.
I know Marion Lake said, look, that's not really an issue for our bank, but how about for our country?
It's a huge issue. You know, we've lent. This is all government lending, by the way.
Right.
And bad lending is bad. Whether it's the mortgages you make or businesses, one of the things you have to do is have discipline around capital so you get a return. Bridges to nowhere are bad. Schools that don't work are bad. Lending money to people who can't pay it's a mistake. So that student lending was a tremendous amount that's been done in the last 7 years. The folks are having a hard time paying it back. It's all owned by the government, so it's the taxpayers going to lose whatever hundreds of billions of dollars. But it is not good, because what we're seeing today is that in other lending, so mortgages, these kids are having a hard time getting a mortgage. Credit card, they're having a hard time getting a credit card. So it is affecting the economy. It's not like the mortgage crisis. It's $1.3 trillion or $1.4 trillion, so it's not, I wouldn't call it systemic. It's just unfortunate. It's really highly unfortunate.
Okay, let's go back to international for a second. You talked about the idea of the tariffs so far, that you've got a skirmish. But at what point would it be a war? And at what point should we be worried that it's really gone overboard?
You know, I worry about it, and I just don't know. You know, I mean, I think China has been very predictable in retaliation, and I think the market kind of expected a tit-for-tat retaliation. I think they're kind of expecting NAFTA to get done. It could get worse from here, and I really don't know, and I hope it doesn't. I hope that they sit down and have rational conversations, and we have both NAFTA, which we should do, because Canada and Mexico are good neighbors of ours. I'm going down to Mexico later this week, and with China. And I don't know what the conversations are behind closed doors anymore, so I really don't know, but I think we should try to get, again, the president raised very, very, very good issues. We're only talking about the process by which they get to conclusion. I hope their process works. I just think it's kind of a riskier way to go about it.
How do you go by, look, the president said the problem with banker Jamie Dimon running for president is he doesn't have the aptitude or the smarts and is a poor public speaker and nervous mess. That doesn't sound like cooperation. But how did you patch that up? I mean, I'm sure in the last 10 days you patched this up.
I have not spoken to the president.
You haven't?
But I made a mistake. I shouldn't have yapped like that, in which some of you mentioned on TV. But I do want to focus on policy. So my view is let's just focus on policy. I shouldn't be taking shots and having jokes at anyone's expense.
Well, would you put this in the case of, say, the London whale, where you said it was the stupidest thing the stupidest, most embarrassing situation I've ever been part of? Is this right up there with the London whale?
No. I've said a lot of stupid things in my life. The London whale, we lost some real money.
Okay. Because what I'm thinking about is the things you're saying are common sense things that we've not heard from bankers. We've heard from bankers be on the defensive for a decade. You really are saying, here's how public-private partnership make these neighborhoods better, get much better schools, and we change our country. Are you changing city by city?
We're trying. But again, you have a lot of guests on TV. You ask most of them what they're doing. A lot of these companies, they're doing stuff just like this. There's not just J.P. Morgan, but all these companies that are part of the BRT. We actually put out a booklet of the work skills. Everyone's doing something. And everyone's doing a lot in diversity and other things.
So you don't think we're falling behind other countries? We've seen mortality numbers.
I think in total, we're slipping. I think that bad policy is why we've grown at 2% over the last 10 years and not more. And that 2%, and the American public should know, 20% growth in 10 years is half what it should have been.
Is China going to pass us?
I doubt it. Okay, this country is blessed with things that are just way beyond. Schools and the good part, the universities, land, water, energy, the land of the Pacific are the best businesses, innovation. But we have this series of problems. We fixed one, an uncompetitive tax system for business. That was a bad idea. We have to fix immigration, inner city schools, opioids. We have to give felons a chance to have a job. We got to get people back to the work skills. We should double the earned income tax credit. And one day we have to have
tax reform 2.0 is reasonable.
And we should have a negative income tax of some sort. Make jobs that people have, because jobs give dignity, jobs have better social outcomes, but they need to be a living wage. So I agree with that concept when I hear it from folks. And the earned income tax credit does that. And if we need to double it, we should double it. And you have to pay more, so be it.
I agree. Okay. Painful, but I do. Now, we're going to send it back to New York, and then we're going to spend a little more time for talking about mad money and what your big picture issues. Thank you so much, Carl.
Thank you all.